Macari from FNB Wealth Investments joins us now. Wayne, thanks indeed for coming through. We've had the Rand weekend, but we still saw things like financials and banks scaling. It normally doesn't happen. Why did that happen today?
It is unusual. Look, in our view, the banks and the retailers are actually quite cheap. Maybe this new poll about ANC support levels being above 60 has given these shares a bit of a boost, because certainly if the ANC does come out in the actual election above 60, it'll be very good for domestic shares. But then in theory, it's also good for the Rand, but the Rand weakened today. So unfortunately, mixed messages coming out to the market, and as happens very often, not quite making that much sense.
Yeah, but I mean, I get the impression that none of the currency movements were domestic.
No,
am I right?
No, there was very little domestic influence. Look at the big event last night.
Yeah.
In America, the chairman of the Federal Reserve gave his monthly speech, and he said, we know inflation's low, we think it's not going to stay there, and we're not talking about interest rate cuts. So that strengthened the dollar. It also, in fact, dropped the overseas share market. So it's very surprising, once again, why our market went up and overseas markets fell, on the back of the Federal Reserve chairman saying no interest rate cuts in the foreseeable future. And the market was starting to think maybe there's a chance of this. So that was probably the biggest single driver overnight and today.
On the markets. So what's happening with miners? Another bad day for gold mining. And just talk to me, maybe the route is in overseas as well.
Yes, it's exactly the same thing. The oil price is down on the back of the chairman's speech, because it says, you're not going to get an interest rate cut which will boost demand, which will give you a better oil price. And as you mentioned, the US infantry, even though I think that's a secondary factor, I think the main factor was the Federal Reserve's chairman's speech. But we all know oil is actually at the moment a false price. It's not being engineered by higher demand, it's being engineered by production cuts by the big producers, mainly OPEC. So maybe 65 is a better price given the world's economic conditions. I don't think above 70 is sustainable because it's artificial.
Yeah. We were talking about gold, Wayne, and I just want to bring in Harmony Gold here, slumping after a production update. Of course, that move is independent of what happened internationally.
Yes, very much so. This is very company specific. A big increase in total gold production, but that's because they've made acquisitions and another one of their mines is coming on stream. But the negative, I suppose, is two aspects.
Yeah.
They're sticking to their production target for the year, but they increased their cost estimate by 4 or 5%. So these mines are all already on the margin. They're barely breaking even. And when you come and tell the market that my costs are going up 4% per ounce, it eats your margin quickly because your margin's already that slim. And then the second thing is they've got a massive deposit in Papua New Guinea, a mine called Wafi-Golpu. Yeah. Now, I've been in markets a long time. I heard that name 20 years ago, and there's still no gold being mined there. So they did give an update, but to me it was a little bit of a negative update. They didn't actually say things are progressing well. It was, I think, a bit of a cautious statement. So those two factors pushed the share down 5-odd%.
Yeah, we saw that. And then the PMI numbers. I mean, it's interesting to see the difference between months which experienced load shedding and that which didn't. Now, of course, factory activity, Wayne, is below 50. It's in contraction phase at the moment. But it's always interesting to revisit it to see whether or not we've got the sector that will one day create jobs for us. It just doesn't look like it at the moment.
Look, it's below 50, but at least it's going in the right direction, and it's the first time it's gone in the right direction for a good couple of months. So it is, I suppose, indirectly good news. But I think a lot of people must understand business in its broader sense, and that includes manufacturing. Businesses aren't going to spend money until they see an uptick in consumer demand. They never lead, they're followers. You're not going to build a new factory if no one's buying what you're selling. So business expenditure, you often hear stories, business must spend money. Business has got lots of money, which they have, by the way, they've got tons of money. But they don't spend money until they see demand growth. And I don't think we're going to see an uptick in PMI until we see an uptick in consumer expenditure, and that's critically dependent on sentiment.
Yeah.
So if the ANC gets a good number in the elections next week, if the president carries on doing what he's doing and maybe even intensifies that, sentiment should change for the positive, and then you'll see, you literally go from a vicious cycle to a virtuous cycle, and it's mainly dependent on sentiment.
And there is this view that perhaps even a strong Rand is dependent on a solid ANC victory.
Correct, yes. Undoubtedly.
Wayne, thanks very much indeed for coming in.
Pleasure.
Business Insights there from Wayne McCurry from FNB Wealth and Investments.